Have you ever looked at your grocery bill and wondered why everything is suddenly so expensive? Or filled up your car and winced at the price per gallon? You might think it's just random economic ups and downs. But what if I told you that conflicts happening thousands of miles away are directly reaching into your wallet? We often see wars as distant events, something we watch on the news, tragic stories happening to other people in other places. We see lines on a map, military hardware, and political leaders shaking hands or pointing fingers. But the reality is, in our interconnected world, those front lines extend all the way to our local supermarket, our gas station, and our bank accounts. Wars don't stay neatly within their borders. They send economic shockwaves across the entire globe, and you're feeling the tremors every single day. Let's start with the most obvious one. Oil. It's the lifeblood of the global economy. It powers our cars, heats our homes, and it's a key component in manufacturing countless products, from plastics to fertilizers. When a major conflict erupts, especially in an oil-producing region like the Middle East or Eastern Europe, the global oil supply chain gets nervous. The risk of disruption, whether through damaged infrastructure, sanctions, or blockades, sends oil prices soaring. Think about it. Traders get spooked. They worry about future supply, so they bid up the price of oil barrels today. This isn't just a number on a trading screen. That price increase gets passed down the line. First, you see it at the gas pump. Your daily commute becomes more expensive. Then, the cost of transporting goods goes up. That truck delivering your favorite snacks to the grocery store? It runs on diesel. The plane carrying that package you ordered online? It runs on jet fuel. All those costs get baked into the final price you pay. Suddenly, your weekly shopping trip costs more. Not because the food itself changed, but because it became more expensive to get it to you. But it goes much deeper than just oil. Let's talk about supply chains. Our modern world is built on a complex, global network of production and shipping. Your smartphone might have components from a dozen different countries, be assembled in another, and then shipped to you from halfway across the world. When a war breaks out, this delicate dance can come to a screeching halt. Major shipping lanes can become dangerous or entirely blocked. Think about the Suez Canal or the Red Sea. When these critical maritime choke points are threatened, ships have to take longer, more expensive routes. That adds weeks to delivery times and a huge amount to shipping costs. Insurance premiums for vessels going through risky areas also skyrocket. Who do you think ultimately pays for all that? You? Do? The price of that new laptop, that furniture, that piece of clothing, it all goes up to cover these new logistical nightmares. It's not just about shipping either. Countries involved in conflicts are often major producers of specific goods. For example, Ukraine and Russia are massive exporters of wheat, corn, and sunflower oil, often called the breadbasket of the world. When that supply is disrupted by war, the global price of food staples shoots up. This doesn't just mean bread is more expensive in Europe. It means countries in Africa and Asia that rely on these imports face potential food shortages and massive price hikes, creating humanitarian crises that have their own ripple effects on the global economy and political stability. We've also seen this with critical materials like neon gas, essential for making microchips, a huge portion of which came from Ukraine. Conflict there created a massive bottleneck for the semiconductor industry, affecting everything from cars to gaming consoles. The A car you wanted to buy might have had a waiting list, because the factory could get the chips it needed. Again, a distant conflict created a very real-world problem for you. Now, let's tie this all together with the big one. Inflation. When the cost of energy goes up, and the cost of moving goods goes up, and the cost of raw materials goes up, the cost of everything goes up. This is the definition of inflation. It's a hidden tax on your savings. The money in your bank account buys you less and less each month. Governments and central banks try to fight this inflation by raising interest rates. They make it more expensive to borrow money, hoping to cool down the economy. But this is a double-edged sword. While it might help tame prices eventually, it also means your mortgage or car loan gets more expensive. It becomes harder for businesses to get loans to expand and hire new people, which can slow down the economy and even lead to job losses. So, a war on another continent can lead to central banks making decisions that could put your job at risk or make it impossible for you to buy a house. Beyond these direct economic channels, there's also the element of uncertainty. Markets hate uncertainty. War is the ultimate uncertainty. Investors don't know how long it will last, how it will spread, or what its ultimate consequences will be. So, they pull their money out of what they see as risky investments, like the stock market, and put it into safer assets, like gold or government bonds. This can cause stock market volatility, meaning the value of your retirement account or investment portfolio can swing wildly. One day you're up, the next you're down, all because of geopolitical tensions you have no control over. So what can we do? It can feel overwhelming, like we're just pawns in a giant global game. But the first and most important step is to understand what's happening. Understanding geopolitics is no longer an academic exercise for political science students or a hobby for history buffs. It's a crucial tool for financial survival in the 21st century. When you read the news about a conflict brewing, don't just see it as a foreign policy issue. Start thinking like an economist. Ask yourself, what does this region produce? What major trade routes are nearby? Who are their main trading partners? By connecting these dots, you can start to anticipate potential impacts on your own finances. You can make more informed decisions about your budget, your investments, and your savings. Maybe it means building up a bigger emergency fund because you anticipate economic volatility. Maybe it means adjusting your investment strategy to be a bit more conservative. Or maybe it just means understanding why prices are rising and adjusting your household budget accordingly, instead of feeling confused and powerless. This isn't about being cynical. It's about being realistic. The world is more connected than ever before, and while that brings incredible benefits, it also means we share in each other's crises. A missile strike in one part of the world can be felt as a price hike at your local gas station. A blocked shipping lane can mean an empty shelf where your favorite product used to be. The next time you see headlines about global tensions, remember, that's not just a story happening over there. It's a story that will, in one way or another, find its way into your life and onto your bank statement. Paying attention isn't just about being informed, it's about protecting yourself and your financial future. It's about navigating the world as it is, not just as we wish it would be. Thanks so much for watching. If you found this perspective helpful, please consider liking the video and subscribing to the channel for more content that connects global events to your daily life. See you in the next one.